Good evening, Wizards, and welcome to episode 10 of Wizard Wednesdays. How we've got here so fast, I do not know, but all I know is I'm excited to be covering the market during this very moment in time. So first of all, beautiful sunny day out here in London right now. So the windows are open, and I do apologise if you hear the likes of sirens, helicopters, aeroplanes, as that is just how London sounds. It's like a real life Grand Theft Auto out in that world. So please ignore any background noises you hear. It's incredibly hot and I do not want to sweat to death during this breakdown, and I want full clarity whilst we look at this exciting point of time in the market. So I thought I'd jump straight in whilst Ether is currently exploding to the upside. Having a look at XRP, fluctuating a little bit around that level. LTC also fluctuating at that 78.6 fib, and BTC also lingering around that head and shoulders on the 1 hour right now, which is slowly breaking out to not become one anymore. However, let's just have a quick coverage of these. As you can see, Ether has the most momentum right now. Beautiful to see, potentially still breaching. Let's see if it actually breaches that $230 level, but for now let's go to coin market cap and get this underway. So first thing that we should take note of is BTC Dominance, 57.4%, fallen down from around 60% just 2 days prior at the peak of the run-up, where we've now seen a little bit of stability in the market. So the good thing is we've been so up to date and consistently moving in sync with the market over the course of the prior week with all these updates and videos. It's good to just naturally flow this into the Wizard Wednesdays this week. So Ethereum having one hell of a day alongside Binance Coin, which has gone to show yet again it just does not stop, and despite the hacking, anything that's happened with Binance, the BNB token and its utility is just being bolstered tenfold. And I do believe the 1.2 million they are giving away in terms of fee reductions, etc., could be a potential benefit to Binance Coin surging as well. But we're not really here to focus on the majority of alts right now. We have to just remain focused on these key levels for BTC, LTC, Ether and XRP. So Ether's still pulling back a little bit here, daily candle looking nice and strong. Cover that in a second, as well as we did dip to that $230 region as well just prior. So having a look at coin market cap, very interesting to see Bitcoin's having its first potential day in the red after what's been a magnificent week of bullish momentum. Not much logic behind it, but boy have we seen some good bullish action. And going to the monthly, since 2019 began, starting at $3,200, we're at an amazing $8,000 region, which is holding up pretty nicely for the time being, but there's more to come on this shortly. So going over this coin market cap, the first real red day with BTC, Ethereum rocketing, XRP doing nicely as well, still fluctuating below that 44 cents region we covered yesterday, which I did anticipate to be a slightly higher spike than the 43 cents region. So nice to see a little peak higher. I know many of you caught a little long and many of you caught an intraday short as well. So trying to find ways to even provide a little bit of an intraday opportunity during this chaotic market, as we do not want to be going against the overall main bullish trend right now, but we also have to still remain as calm as possible until we see our final indicators. We've seen how this market can retaliate. So looking at how magnificently the altcoins are doing now, and judging from the BTC dominance still being strong, I do still have a feeling with the BTC now slowing down slightly and being a bit stagnant, it could be an indicator with still such a high dominance. Maybe the altcoins will slowly drag back into the negatives as well by the end of the day or week. So it could be an early indicator. Again, not much to be said. One thing that's still very interesting for me is Binance. Where has Binance gone from this list? That is drastic. Binance is now 22nd in the list of Bitcoin markets for actual volume. BitMEX has of course stayed the same. We've seen many of these exchanges, OKEX, that was around 7th a while ago. We are just seeing the USDT pumping this market like no tomorrow. As you can see, majority of it is just spot trading, absolutely flying to the sky. So I've been keeping a very close eye on this, and I would recommend keeping a close eye on this as well, because it's really showing what's manipulating this market to its absolute extent right now. So this is why I'm saying we cannot be fully sure just yet the market's going to break out, because there is a lot of artificial volume coming from the likes of USDT. Binance trading should now be resumed as normal as well. So things are looking promising, and if there's one thing to go by from the 2017 bull run, it's that USDT and Bitfinex combined did aid the overall bull run. We did know there was about 100 millions of Tether being printed. USDT was just being printed out like no tomorrow, and it was aiding the market surge by all means, and that did then help the institutional capital jump on board as well. So we're here to again continue and look at the overall market and see what signs we can gain from this current situation. So starting off, of course, with yours truly, Bitcoin. I think this is the main focus and the main priority of this Wizard Wednesdays, as always. So as you know, looking to form a potential breakout, we need confirmation. Here's what I've done just in case we do see that potential pullback. We have some Fibonacci levels here to take into consideration. We have the weekly moving average lingering around the $5,000 region, and we have, of course, the longer term moving average lingering around our 78.6, around $4,200. Again, these levels for the time being, we will only start taking into real consideration upon this weekly candle closure, because right now we need some serious clarity on this level here, as we know. Currently lingering below this level, we did see an attempt to test this level, perfectly tapped and then slammed all the way back down. So we've seen a peak of this market of around $8,200. We're now lingering around that $8,000 mark again, which has been shown to provide some heavy resistance over the past 3 days. And looking at how price has been before, it can normally be in a 3-day radius where price consolidates and then potentially breaks out. So this is actually quite a crucial daily candle as well. And it's not one of those days, or it's not one of those scenarios like we normally have in the market where we await a candle closure and simply just catch a reversal or catch a long. The problem being right now is where this market is currently located. You could see a daily candle closure even up to this level of say 8,200, but it doesn't mean we've breached that high just yet. So we just have to remain calm, level-headed, and just practice a bit of patience. As I've said before, I know you can just see all these green candles on FOMO, think you're missing out, but simply have a little look at prior, look at prior, look at prior. There is usually a pullback of some extent. Even if we see the breakout here, we should await a slight pullback of some extent, which we can recalculate upon a breakout. So we're currently in limbo in the market, and I'm not willing to tell you to buy at such a high level, and I'm not willing to tell you to short until we have a bit more confirmation. But overall, I'm hoping you can see the clear reason why we are not going to let our emotions get the best of us in this current scenario. So even a wick does not invalidate a potential reversal. Reason being is you've seen wicks before breach the prior high only to continue plummeting the market. So there's no saying this will actually occur right now, but just showing you the theory and the thesis of wicks potentially breaching this level does not invalidate a potential trend continuation. So monthly, despite what many people say right now on the monthly, this is actually technically breaching, so it will be interesting to see how that monthly closes as well. However, we will not need to wait that long. The weekly should be more than enough of a telltale sign, and then the week after that as well. So from a weekly perspective, we have that Fibonacci there. Be interesting to see if price can actually find a way to close back below this Fibonacci level, and maybe the early stages of this week are simply just a manipulative run up just before the likes of Binance and Bitfinex, etc. start going fully back into action, and then we could be dumped. So we're at that point as well. You know, I cover this all the time, the positive news articles. We've just found out eBay is in fact not going to be integrating cryptocurrencies into the overall platform and interface. I believe that was either a misunderstanding on our behalf, or from judging from the marketing pictures that were posted, it does seem like eBay were slightly hinting and teasing during the euphoria of this bullish run-up that they were going to integrate crypto as well. So a very suspicious announcement from eBay that they've kind of backed out of that, and that they're not actually having any affiliation with crypto whatsoever. But let's not focus on that for now. So the current point of interest for me is this $8,000 region, which is held up currently 2 and 3 days in a row should we see this candle closure. So all eyes on this closure as well. Going to the 4 hour, as you can see, we did have that head and shoulders, which is currently holding very nicely. Bit more visible on the 1 hour, although this has been a very interesting H&S setup, not technically 100% valid, and we also saw a very similar instance here, except in this instance we did not see the wicks rejected. We saw a simple slam down, manipulation, and a ping back higher. With this current instance right now, we are seeing multiple rejections just like this scenario as well, so we have to be very cautious upon seeing a potential breakout of this level, which could then potentially plummet us even higher. We also have this here to take into consideration. Price has been rejecting. If you want to extend this out to there, we are still forming in that current wedge scenario as well. So if you look at this right now, we are also forming one of those pendant slash wedges. You know, I like my potato wedges. That is why I call them wedges. And it could be an easy way to identify a potential breakout, snap, retest, and a plummet lower. I do believe, and this is something that many people need to realize, even in the event we begin seeing our breakout, it's very likely you will see at least one bearish candle. Many people FOMO in, and this is again market psychology. It can be extremely devastating to be entering, or not entering, in fact, even worse, to not be entering when you're seeing all this bullishness, and you just want to jump on board and get a little bit of those profits just to feel that satisfaction. You don't want to be missing out, and that is exactly what FOMO is. FOMO isn't just a buzzword people use in the cryptocurrency market. It's very real, and we have to also learn to not abide by the potential outcomes that are negative of FOMO. So looking at this level now, 4 hour again, huge spike through, pulled back down, and for pretty much, let's go to the 12 hour, that's 24. So around 2 days worth of 4 hour candles have really failed to exceed above this region after peaking at $8,000. Yes, we have a few closes above, but the clear level that I'm taking into consideration right now is here. And for me, it's just not enough to confirm a bullish breakout yet. This is the first time since we've actually been throughout this little surge that we're actually seeing a 4 hour real amount of consolidation at a crucial level. Huge psychological round number. The bulls have been pumping this market to a level I have not seen in a very long time, and it's amazing to see the market is actually experiencing such bullish momentum by all means. But the only reason I like to do, just kind of provide a bit more level-headedness, is so none of us are in for a nasty surprise. But the beauty is, this is what I always tell people with dollar cost averaging. If you're following the principles that I've been teaching you for a very long time, you would have been dollar cost averaging before the bull run and after the bull run. And regardless of even if you FOMO'd here or here during the bull run, if you were dollar cost averaging in, by the time you even got back up here, you would have hopefully recouped even some of your losses or broken even, just through the art of patience and buying when everybody was fearful. So all eyes are still upon this region, and the reason I'm updating you consistently is because once we start seeing a breach of this level, we are ready to pull that trigger upon a nice healthy pullback and enter. For the time being, however, we have this huge broken trend line as covered in the prior video. What could potentially be unfolding if this level fails to break is very simply, despite what anybody says, you have Fibonacci levels aligned here, $5,000 and $4,300. Perfect confluences where price has rejected before. When using Fibonacci levels, we know to follow the principles of where prior price action has once or historically met the same levels as the Fibonacci alignments. Looking at this level here, the precision of that level with the 61.8, I cannot ignore these potential signs, and that is why it's best to stay out of the market until there are clearer signals. 1 hour left, well, 50 minutes on this 1 hour candle. We are seeing a continuous amount of consolidation and attempts to break to the upside. However, the only difference is this is actually rejecting at the overall resistance, whereas with these scenarios we were breaking higher and then rejecting a little bit lower away from the overall high. But all of these are accumulating in the same region. So we have to be very sensible and just realize that daily candle closures are crucial. We have not really wiped out these prior wicks either of these rejections. So now that we are forming a nice new basis of where a potential level of resistance is, a nice clean breakout of these wicks can give us a nice intraday explosion to the upside and then a potential pullback from there onwards. But for me right now, maybe this will be the weekly candle that ends up closing, tapping this level once again and absolutely falling. So this may not even be the dictator. This could be a very simple weekly candle closure that ends up closing below this level, and then we have to wait for next week for another confirmation. All I know is I would much rather await these clear factors and confirmations versus just FOMOing in at the very highs. And a good example was, again, this just looks bearish to me right now, to be fully honest with you, was the other day where we saw the pullback pretty much yesterday. We saw a huge surge to around $8,200. If I go to the 4 hour as well, huge surge to this level 2 days ago, sorry. And then I told you guys, just be cautious, do not jump into the FOMO of $8,000 being broken, because price then absolutely plummeted down to $7,600. And it kind of just goes to show why we must practice rationality and patience in the market. Because if we then whip up one of our good old Fibonacci's and you look at the Telegram content that was provided in terms of this scenario here, The $8,000 region with the Fibonacci over here, 78.6 has been met. We have nice alignments with 7,500 and 7,300. Key levels just below, and again, trendline retest in play. Looking at this level, 8,600. It's still where we have been rejecting time and time again on the 1 hour. And looking at these levels here, they still make perfect sense around these levels. And if you check the Telegram, I did cover there could be a potential pullback even short term to the likes of the 7,400 region. So just want to clarify again, I'm not a party pooper, I'm not a bear, I'm just someone that's trying to provide a little bit of voice of reasoning in the market where everyone is screaming for the greatness of what's going on right now in the temporary moment. But these people are not waiting for confirmations, and it's quite frightening because it could literally be one of these moments here where price surged up, failed to close below this region, and then from the next week we just absolutely obliterate all of the gains we've made and continue to a next leg lower. So it's very hard in the present moment to see beyond what the current candlesticks are showing, but this is how you can sometimes preempt how the market can very nastily surprise you. So I'm always using this prior price action as a good example, because even during these huge runs, let's just say in these instances where we pull back and test prior levels of resistance, if this pulls back and even falls to the likes of 6,000, or even, again, looking at where this is, prior pullback to the prior resistance level, that would correlate with almost $4,000. And that would be a shock to so many people who are buying at the highs. And it always makes sense to see a potential 50% retracement in the event of these current market conditions, because we're at the peak now of an $8,000 region. This is where the retail investors begin jumping back on. The headlines, everyone's being sucked in, and we can see how well this level just continues to reject. We're just continuously pushing back from $8,000 right now, and it would make perfect sense to me for this current moment of euphoria where everyone's FOMOing in to buy at $8,000, and then the market just swipes back and you lose 50% of your investment. And for a risk at such a high level, despite what many people say covering both sides, it would be insane not to be covering both sides of the market at this critical level. As you know, since day one of Wizard, when it comes to trading, it's very obvious. We wait levels to break out, we then catch a move in either direction. But even then, it's normally very easy for me to just be like, guys, we will reverse from here, we'll pull back from here, simple reversal, trend continuation, up and down, blah, blah, blah. But the cruciality of this level, I cannot provide just one bias, and it's basically gambling, to be honest with you, to even be claiming that you know it's just going to go up, because all of these downside levels could be met. Even a $6,000 pullback could be sufficient for a nice potential move for any of you looking to get on board. And I just don't think the market's ready for a bull run yet. It doesn't seem very likely, it doesn't seem very wise, it doesn't seem very rational. We haven't had that much good news and fundamental news to jump on board. And yeah, there's many other factors that go into this. But let's combine this with some other analysis for now, as this level just continues to reject again and again. But do take that 1 hour and 4 hour Fibonacci into level as well. If we start seeing a breakout of this zone here, very easily we are going to fly, and realistically it's already tapped and started to break through before. So another level to take into consideration around this breakout here, but monitoring this level for the time being is key. So a quick breakout and a breach of this level could just sink us very far lower. But in saying that, again, all we're waiting for, guys, again, 3 hour, I don't know why I keep skipping these time frames, going over to the likes of the daily. Let's clear this up a bit, keep this nice and simple. 3 wick rejections on the daily for the first time. Again, this candle here did not pull back, it just obliterated. So if we actually end up seeing 3 candles closing similar to this movement, could be a bit of volatility. However, around this region there's much more importance. It's a psychological level, and it would show a spike through $8,000, multiple rejections, but yet not a single candle for the daily so far is closing above that $8,000 zone. So it could be marking a very significant importance. Whilst the 30-minute and the 15-minute is not showing too much, I do by all means believe it's giving us a nice insight into how much this level, we're now range bounding between pretty much this level here. Could be seeing some more bounces back and forth, but look at this right now, it's just dropping like wildfire continuously from $8,000. So all we need realistically, if you're looking for bullish momentum, look for a breakout of this level, potential pullback or a slam back into this box here, and we could be looking at a huge rocket ship to the upside. But for now, looking at these factors, guys, it's just very unwise. You want to be looking at these daily candle closures every day until we see a further confirmation. If this starts closing green, it could very well be an indicator for further movement to the upside. But right now, looking at how this is just rejecting, that if this ends up closing bearish, and then we end up seeing a double closure on the same level here below $8,000 after 3 multiple wick rejections. Again, more further signs we could be in for a very nasty shock, and I'm not willing to let go of it just yet. There's no ego involved in this as well. This is something we must realize in trading. It's not about being right or wrong, it's about being logical and following the candlesticks themselves and the overall trend. We are still in an overall bearish market despite the belief of 2019 beginning going up to this level. It's only been 5 months. If we look at the overall bearish momentum, why are we considering 5 months of bullish momentum a bull run or bullish breakout and a new trend when we have been falling for 2 years pretty much to the downside? So why are we completely disregarding 2 years worth of price action and then completely throwing in 5 months worth of price action for confirmation? It does not work like that, and we are not here to catch this movement. The euphoria is absolutely insane right now, and there is actually backlash for me even predicting price could potentially fall lower, and for me that is a very alarming sign. When you begin to see people panicking over the potentiality of a downside movement, you know the euphoria is way too high and people are now clinging on to that desperation. Some people are saying stuff like, why are you not happy for us? Like, we should be enjoying this bullish momentum, let's enjoy it. By all means we must do, but this is the point of trading. We are not meant to have an ego. We are not meant to get excited when it goes up, and we are not meant to get excited when it goes down. The point here is to catch moves in synchronization with the market and not get ahead of ourselves. During this movement, a crazy amount of money has been made, and that is why I stress the importance of holding and combining with your day trading strategies, because when you cannot find optimal opportunities for margin trading, your long-term portfolio will be rocketing in value, so you do not need to stress too much about actually trying to catch potential margin trades. This is the beauty of combining all of these factors into one nice bundle. So taking this into consideration, it is rejecting that level. We have to be very important. Weekly candle closure, it's only Wednesday and we're already seeing a potential pullback. As I did state in pretty much before this weekly candle closed way back below this level, the first thing I said was the next weekly candle could either be attempting to test this region even halfway, or it could be a bullish momentum regardless. I was expecting either an instant pullback or a wick rejection to this level. We've obviously annihilated this level, but we haven't annihilated the prior high, and part of being a trader is improvising and adapting with the market. Certain key levels have not been broken for confirmation, so I just need to keep drilling into your heads. Patience will be practiced until that point onwards. Now, going over to LTC, another big factor to take into consideration today. If we go to coin market cap, nice. Looking at this, it's around 5.23% up, but look at this, the weekly fib, the 78.6 I've been covering. If this would care to change for us, let's reload this quickly. Let's hope the Wi-Fi has not died on us. There we go. So first key point here is the weekly time frame. We're still lingering around that level, which is nice to see. We've had a huge rejection here, another weekly candle testing this level. A, B, C, potential D extension still aligning with the moving average just below around $70. Nice conservative pullback potentially. Trend line, let's get that precise on the weekly as well. Looking at these key levels just below, again, they're all lining with these lower downside targets, which would easily correlate. Let's be honest here, huge rejection. Forget this level. Let's actually just extend this to where the wicks have pulled back every single time. 1, 2, 3, 4, 5, 6, 7, 8 wicks rejecting this same region. And I do apologize for the sirens in the back. I did tell you London was a real life GTA. So getting rid of this for a second, looking at these wicks here as well. Huge attempts to continuously break out from this zone. 1, 2, 3, 4. The daily candle still did not close above any of these wicks. We now have our first attempt to reach higher. A nice $96 precise spike pulling back. This daily candle yet again could give us a little insight into where the next movement could be occurring. We have some nice daily moving averages down here as well, located just around that $80 region as well for a quick pullback. We still are looking at potential movements. There is just continuous rejection and a huge amount of resistance at these levels. So breakouts above, looking at a clear breakout of this level, we are going straight to $108. But for the time being, it's not worth trying to catch that move until there's been significant clear indicators of a pullback, a spike, and then we can catch potential longs to the likes of $108. And then obviously from there, we could be looking at even reaching higher to the likes of 124. But for now, this level, 78.6, holding like a lucky charm, and I cannot disregard that. And for me, I think the biggest factor is how this Fibonacci lines up so well with the levels we've been anticipating for almost a month now. The 60 and the 50 region all aligning with these external trend lines. And I've always warned you guys, the same way we caught these prior spikes before with BTC on the daily time frame, for example, these huge movements that obviously seem so irrelevant right now because of this momentum, but back then you're looking at these movements to go from 5,000 down to $5,000, so from 5.7 down to a $700 movement, which is very insignificant to what we're seeing now. It's quite common to see even more than that during this huge amount of volume in the market. But looking at these pullbacks, the way they correlated and the way we got these moves, even though these are on a much larger scale, they cannot be disregarded because they always unfold in the same manner. 1, 2, 3, 4. We did not expect this as we broke through the $5,000 region and we started nearing $6,000. Many of us expected it to just continue tapping, but the reason we caught these reversals is due to a little bit of patience and preempting potential crucial levels. And the same goes for here. This is the main external weekly. It's taken into consideration. So even if we start breaking higher, we could still expect a potential pullback to slam down here, shock every single person that bought at the highs, just as you've seen here. Again, looking at this, taps there perfectly as well. Let's just adjust that. Broke through at the peak of euphoria as we continue to see slams down, test even near that trend line. Even if it breaks through here, test these levels here, then the market absolutely rockets and continues. So wait for those key indicators. Look in here. Even if you got angry or upset that you missed this bullish breakout and you thought, oh my god, the bull run's coming, this is the stage where you begin to buy because you've missed a breakout, you're panicking, you think it's never going to return. Same goes for here, slam back down. This is that point in time where price just pulls back and breaks through. So we do need to be exercising caution on all levels right now until we see confirmation. It is just not worth buying at the highs. And as you've seen from many people even posting on my page, on Instagram or on Twitter, it's better to miss the 100% return, knowing you could then lose 100% by simply buying at this moment in time. And you could have easily saved that capital, knowing it could then pull back, and you would have made a lot more money by simply controlling your emotions. It's very dangerous to be littering through social media, Twitter, Reddit, any of these platforms, Discord, you name it, when the market is in these conditions. You shouldn't be using too much of other people's analysis. You should be combining mine with yours, maybe with someone else's, whatever you want to do. Just make sure you are using a logical approach. If people are simply just telling you to buy, I do not recommend going down that route because you need to be using a bit of your own intelligence combined with other factors to gain an overall picture. And if you're simply just taking decisions off somebody else's bias, it can be very dangerous and detrimental to your own trading. So going over to XRP, a key feature I mentioned yesterday was a potential spike to around 44 cents, peaking a bit higher than 43. We did in fact see that, and we saw the spike leading to a very nice pullback. Now, going to the weekly here, why are we focused on that level? First of all, for all we know, this weekly candle could be closing back below around 38 cents, and that was a fairly healthy pullback I suggested. Looking in line with this moving average I have marked here, we have seen this so many times. XRP in particular, I have to stress this, guys. How long have we been wedged between this golden grail of a box? We're just continuously wedged in between, broke out, spiked precisely to the 78.6. It's now showing its validity. This level, you know how long we've had this 46 to 44 cents region marked since we saw that breakout. I've actually been covering this since I literally started Wizard. When I finally wanted to see that breakout above, I said it will go to 44 cents. Now it's hit that level that we've waited almost a whole, well, the first half of 2019 for. It is wise to now be a bit cautious on what's going on here. These moving averages have been spiked many times before. Long term, guys, this is a good example. We broke out from 25 cents all the way up to 80 cents. How many people thought it was the bull run until we were humbled in a very quick manner all the way back down? So there's no party poop in here. It's just logic and reading candlesticks. Same goes for here. Huge bullish candle, breaks above all these levels. The weekly then slams back down, shows us we were incorrect yet again. Daily candle, nice huge green. Again, it could be mimicking these kind of candles where you see a green, bit of a pullback consolidation for a week, another test higher, and then it pulls back as well. But for now, until we start breaking clear of these levels, even then, there isn't too much of a excitement for me yet. We've seen how many times the market can humble us, and I'm not willing to take such risks. So pullbacks are more likely than longs right now, although trying to actually time these with margin trades is not wise. It would be good if you start seeing quick spikes higher that breach this level. By all means, those are the short opportunities that can really give a clear indicator. But as you can see, we're still fluctuating around that 78.6 even upon breaking higher. That 44-cent spike that was covered yesterday caused us an immediate pullback, and many of you caught even a nice short, especially from a 1 hour perspective, from the likes of 44 cents down to this level here of around 41.5 cents. So a nice movement. XRP, although I do feel it could actually provide us with a few more exciting spikes. We do have this forming here as well, alongside the new wedge and pendant, whatever you want to call it. 1, 2, 3, make that more precise. So there are a lot of factors showing that we could potentially be looking at a reversal in the market. But this is why there is a lot of indecision right now, because we have now broken above this level, rejected a support twice, but we've also failed to break the upside. So again, it's a 50-50 bias, and if you're willing to take a speculative buy, then by all means do so. But even that 3 hour, click that by accident. Look at all those wicks that are just continuously being rejected. They're just spiking the same area, but progressively getting lower. A lot of warning signs for me in the market right now. And at a 50-50 point in time, 1, 2, 3. Let's have a look at some fibs that are unfolding as well. Again, all aligning with that potential 38 cents region, moving averages, 4 hour, all of these levels. And I've said, if this thing reverses, guys, if we fail to break Ether, again, pulling back already, if Ether fails to progress through these levels, it's nice $240 now, and we go to XRP, failing to break that level, LTC, failing to break that level, these are going straight back down to where they were trading within the prior month, and it's no surprise. And it will be no surprise to see such trading action. So until we can confirm, all of these prior trading areas are a massive possibility. This level here on Ether, trend line, surprise trend line, easy retest where the moving averages are, anywhere between these levels. Trend line could be slammed down and retested alongside this level here. At the peak of euphoria, this could all be unfolding. So we need to really wait for these confirmations, and I'm hoping you can get a bit of an insight into why it's so dangerous to be taking any calculations. Sometimes it's better to actually be out of the market than be in the market and suffering substantial losses. So going over to XRP a little bit more as well, 4 hour still showing some progression, huge downside wick attempt, and again 1, 2, 3, 4, 5. 5 candles technically failing to break that 43 level. No matter how many attempts we've seen on the 1 hour to break higher, even if it has slightly broken higher, the 4 hour and the 1 and the daily, they are not breaking these regions just yet. So there is a strong amount of resistance at these key levels right now, and we've seen it here so many times. When you zoom out and you actually look at what could be happening, let's go to prior surges. I think the best way to look at this is prior surges. When you start to see those levels just fail to break consistently from the exact same line, it normally results in something pretty rapid. There could be a lot of consolidation here with a big battle between the bull and bears, just choosing which way the price will go. And it's looking that way right now. We haven't seen this for a while, since around this region. And even then, it kind of made progressive higher highs and higher lows and exploded. Whereas here, there is now a huge rejection at exactly the same level every time. And this pullback should be indicating that already. So there's a lot of factors that are showing we are at a very detrimental point in time in the market. And if we go to this, weekly taps that moving average, easy pullback. Look at that long-term trend line just aligning with all these levels. Look at that, 1, 2. We've never seen the third retest, and I know I sound crazy, but guys, how many times does the market come back to show us it can do the unthinkable? 1, 2, 3, pulled all the way back from the bull run. Where did it land? Bang, on that trend line, and pinged its way back higher. It's just a progressive movement that will always happen again and again. It's so hard to see it, I know, but when you just preempt these levels, this is how I tell you to manipulate yourself before the market manipulates you. And Ether, a good point. Look at this level here, guys. Tapped exactly like BTC at that prior lower high from all of these movements here. Hasn't breached that level yet, and we need to see that daily closure, or the weekly closure at least, beyond this level. All it's doing right now is tapping these levels where prior sell orders will be accumulated, and it's just teasing us. It's putting us at that brink of manic and insecurity where you're so stuck and frustrated between it's so close to the level, so I should definitely buy, but then it's so close to that level it could pull back. But the majority are buying because they're seeing all this green, but bang, 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 pullback continue. Even if we see, this is why I actually believe, even if we do not go to BTC, something I should clear up as well, let's say BTC doesn't break the sub 3k level, and let's just say we slam back down to these levels here. As long as we continue remaining with these higher highs on a weekly perspective, as you can see, we potentially could just be continuing the rally from there. If you look at this Fibonacci level, let's just say for the short term, we slam, pull back to hit these Fibonacci levels, we tap this level here or this level here, then we see a pullback again. We are confirming ourselves in a bull run, and we are confirming that next breach higher, because if you start preempting in advance, let's just say this taps to $9,500. So we moved this up to around $4,000 where it says the prior fib was. We moved this up to around $9,500. What you're looking at approximately from this level is price would then rocket to this level, pull, or even here, pull all the way back to, let's just say 6,000, and then blow through the roof and continue making higher highs and higher lows. But until then, I am following the normal abidings of Fibonacci, which have never failed us before. So again, preempting these levels in advance. As you can see, the downside fibs, I'm still holding these because we're yet for confirmation of a break, but now we have these huge fibs that could be coming back to humble us very quickly. 61.8 aligns with that trend line there, and the $5,500 region approximately. Dipping even lower, we have the longer term moving average, and of course prior level we broke out from. Just as I said before with many other instances, we've never retested this level since breaking out, so it wouldn't surprise me to still see this unfold. Again, I'm basically trying to use these Wizard Wednesdays to provide you with the more shocking possibilities versus the easy upside possibilities, because we all know once we break out from these levels, we're back in unknown territory. We await a pullback and we can start continuing the trend higher. But for now, it's more important to be showing you the confluences to a downside, because once this breaks out, it's easy. We know what will really be happening from there. But what's shocking is all of these factors we must take into consideration, which the majority of the world is ignoring for some very strange reason. So by all means, this is more of an educational topic versus what will happen upon a bull run, because once we break out here, guys, we know already we can just quickly switch up once price reverses, draw some Fibonacci's, start preempting these counter trend levels, for example, and start catching some huge upside moves where our long-term portfolio will be growing alongside the likes of our margin trading longs, just continuously buying. Because in a bull run, it's very easy to make money, we know that, but what many people do not understand is you have to be prepared for the worst, and we've proven that time and time again. So that's why we're not here to catch the tops or the bottoms right now. We're here to await that clear confirmation, and what could happen is it may even happen so fast we may not be able to catch a move, but all we know is it's unfolded, and then we have a much better buy position from there. So to end it off, I'm hoping this has been a massive eye-opener and a bit more of an easy explanation as to what's going on in the market. It can look wacky, it can look crazy, it can look impossible and unrealistic, but this market never fails to amaze us. Many people did not expect $8,000 in a heartbeat, but it happened. Many people did not expect $6,000 up to almost $10,000 in a matter of 3-4 weeks. It happens, and then it breaks the low, breaks the low. As long as these lower highs are not broken yet, we are remaining in this bearish market. We cannot factor in 5 months worth of data with 2 years worth of data. The same way, I think a good example actually is this. Let's just say we saw a huge bullish market. This happened from 2017 all the way up to the end of 2017, a year's worth of data. Now let's just say even here we see 2 weeks worth of data. Sorry, so yeah, this is weeks. Let me just go to weeks. Yeah, so let's just say weeks from 2016 up to 2017, around this level here, even the end of 2017. It's almost 2 years. Let's just say we see 1 weekly candle pullback like this. Do we start screaming even after 3 weeks of consolidation or downside movement? Or what about here? Do we instantly think the trend is over and then the bull run ends? No, because we've seen the progression over almost 2 years. So 5 months worth of data in a market that's been consolidating could very well change in a heartbeat upon pulling back lower. So again, I'm here to provide you guys with at least some form of reasoning and a voice in the market that stops you from FOMOing, stops you from making stupid decisions, and again, realizing that it's not missing out. It's sensibility, rationality, and it's how you survive the long term in this market. Because for all we know, this is what truly scares me. All of these people that are telling you to buy at the top and just keep buying, without those confirmations, let's be honest guys, now if BTC even pulls back to the likes of $6,000 or $5,000, the Wizards will be one of the only groups or communities of people that were fully prepared for this scenario, whereas the majority are just buying so much, they're going to get absolutely wrecked, and I wouldn't be surprised if we see all these people go missing from the market in such a move, whereas we are already prepared in advance for absolutely both scenarios. The beauty is, if this pulls back, we go straight back to predicting one simple direction. We break above this crucial level, we go back to predicting just one simple bias. But for now, we are being sensible and we are not doing anything stupid. So hopefully this has helped, and I hope you've enjoyed this Wizard Wednesdays. It's gone a bit more in depth than the prior market breakdowns to really give you an overall understanding of this current scenario. So hopefully it's kind of embedded in your head now. We are going to be the most cautious and alert traders on the market until further confirmation. Now guys, please have a great Wednesday. I will be shifting so much momentum now in these next, in particular, remaining weeks of May to get this platform up to par, finalized and brushed up to perfection. So I will slowly but surely be providing some teasers as well. I cannot wait to show you those. So rest assured, everything is unfolding in our favor and the Wizards are only going to go stronger by the day. So have a good Wednesday, have a good week, and I'll be back to update you all on Twitter and Telegram as well. So make sure you're following me on Twitter as well, as I do like to shift the updates on there. Just a quick note to finish off on, because some people do not get the Telegram notifications or they end up being muted somehow. So make sure you're following me on Twitter as well, and the link will be in my bio.